everybody. As you are coming in, welcome to the second session of our self-employment course presented by Ray Sabula, Deborah Wagner, and Alida Toruno. And we are just going to do some very fast housekeeping before we jump in. Just to let you know that the funding for this is under U.S. Department of Education, so do have to read the disclaimer. The contents of this webinar were developed under grant number H421F240198 from the U.S. Department of Education. The department does not mandate or prescribe practices, models, or other activities described or discussed in this document. The contents of this webinar may contain examples of adaptations of and links to resources created and maintained by another public or private organization. The department does not control or guarantee the accuracy, relevance, timeliness, or completeness of this outside information. The content of this webinar does not necessarily represent the policy of the department. The publication is not intended to represent the views or policy of or be endorsed by any views expressed or materials provided by any federal agency.
Like that. Sometimes technology won't get the best of me. All right, we're in session 2, and we are going to start changing gears a little bit and begin looking at how benefits will be impacted, particularly SSI and Title II benefits, how they will be impacted by a self-employment effort. So you benefits planners out there, pay attention because we're going to go through it. I'm going to start off and Deborah is going to take over for me. All right, there's our commercial. You saw that last time. There's the Whisk team. Here's our thank you note. I don't have to read it because Nikki just read it. We just added a special thank you to NDI for their leadership and management of this grant, and particularly for just having us aboard. This was a prime opportunity for the team, and I'm very, very glad Nikki could make it happen for us. All right, whoops, I missed one. Today's presentation, special Title II disability rules for self-employment. We're going to talk about counting trial work period months. There are a few little blips here we have to pay attention to when somebody's engaging in self-employment. Substantial gainful activity. We mostly know how to do that. You know, what is SGA? If you're working with a person with a disability who's going into employment, we can figure that out. It's going to be a few more steps before we can get to that. We're going to talk about self-employment tools, impairment-related work expenses, which I like to call, these are a few of my favorite things, unpaid help and unincurred business expenses. If that sounds awkward, it is awkward. But when we get there, you'll realize what a valuable exclusion you might have before we reach that net employment from self-employment or NESE. Then we're going to talk about how to report earnings from self-employment to the Social Security Administration. So let's talk about some of those special rules. Title II benefits, as we said last time, include Social Security Disability Insurance, or SSDI, childhood disability benefits, CDB, and disabled widowers benefits, DWB. They're all called Title II. We mentioned last time that most of our clients and many people outside of our client world call all 3 of these programs SSDI. When we're talking about work incentives and helping somebody get to work, we need to know what type. So we're going beyond that SSDI lingo to include all 3 of those in our Title II lingo up here. SSA uses special rules for self-employed people on Title II benefits. When working with self-employed people who get Title II, make sure that you explain these rules and discuss Title II rules. We always have an issue with a pretty significant number in our client population who don't know what type of benefit they have. And the last things we want you to do is spend time talking to somebody about SSI work incentives, only to find out an hour and a half later that this person has SSDI. It makes a difference. I've done that more than once, and it's a little bit of a disappointment when you've gotten all that stuff right, but now it's all wrong. So let's talk about the first phase of Title II work incentives, and that is the trial work period. When we're dealing with a self-employed person, you can look at this two ways. We know that net earnings from self-employment is our figure that we're using right now. If that exceeds the trial work period level, earnings level for the calendar year, you have used a trial work month. But we're talking about people and businesses, whatever kind of business that they may be trying to engage in, where you have a period of time early on that you are really working hard and you may not be making any money. Yeah. Social Security has a second step for self-employed people. If you're working more than 80 hours in the business during a month, this does not include startup activities, but if you're working those 80 hours, you have used a trial work month. And if you think about somebody who is opening a sole proprietorship, it's theirs. They may be the only person running it. We've got some other exclusions, but you're really everything to that business. And Social Security is going to look at that as more than an 80-hour a month job. The TWP rules, self-employed people will get the full amount of their Title II benefit payment every month during the trial work period. And I like to tell people this is not time to live large. It's only going to be for those 9 trial work months where both of this will happen. And we will end up living on either benefits or the salary that we're earning from that business. Only months when they meet NESE or the 80-hour test count as trial work months. So those are the things we're looking at. NESE, if the dollar amount is above the trial work earnings level, you've used a month. The next thing we're going to look at, if your NESE is not up to that level, is did you spend 80 hours a month providing services to that business? Now, after they use all 9 trial work months, Social Security is going to check to see what all that looks like. They have to fall within a 60-month period. This is the standard rule. You get 9 months within a 60-month look back. So when you hit what we expect to be 9, we're going to count backwards and make sure we can capture 9 within that 5-year period. And that period moves every month, so that we're always looking and checking. If I use a trial work month next month, does that mean I've caught 80 of them? I mean, sorry, 9 of them in 60 months. Now, Social Security is using this trial work period to determine whether or not the person's engaging in SGA. If you are not engaging in SGA, your benefits will continue to be paid. If you are engaging in SGA, that next month where you're entering your EPE or re-entitlement period will be your cessation, and the following 2 will be your grace period months. Are there any questions out there on that one? I'm seeing a couple. Let's see.
We've had some questions, Ray, but I am addressing them, so you don't need to
Okay,
worry, and you are
wonderful.
welcome to go.
Great, thank you. Now we move into the SGA decision. How do we know if our client who has finished up their trial work period is engaged in SGA? This is a little bit harder. We're not looking necessarily at NESI as the figure. We're looking at countable income. Why does this decision matter? After the trial work period, the person who gets Title II benefits starts their extended period of eligibility, the EPE. The first 36 consecutive months we refer to as the re-entitlement period. And this period is an off and on period. Have you done SGA in a month? Turn the benefits off if you have. If the next month you fall below, we turn the benefits on. I'm going to give you a little hint. Requires monthly reporting, right? Regardless what Social Security says, they can't turn them on or off in any month unless you have reported. So during the re-entitlement period, Title II benefits are paid for any month where you're not working at that level. That is a great safety net. If something happens in your business, you have an exacerbation, and the income coming in and that NESI figure minus the other deductions we're going to talk about reduces you below SGA. With the report of income, they'll turn the benefits back on. It's a very good safety net. After that first 36-month re-entitlement period ends and their 36 consecutive months, benefits will be terminated the first time the person has countable income above the SGA level. Now, this is a good time to re-emphasize in that year, SGA is going to be a figure. So when we're looking at a 36 month re-entitlement period, we could be looking at 3 different SGA amounts. We're always going to have to apply the SGA amount that's effective for the year we're considering. If we break that up, we could have 4. You have 4 years involved with this. Make sure you use the correct SGA amount. If a person is new to Title II benefits and is starting self-employment, this new means less than 24 months in pay status. Social Security uses 3 tests to see if the person is doing SGA. Significant services and substantial income. That's an and there. We got to look for both. But again, go back to my sole proprietorship example. If I'm the only person working in that business, in order to turn the lights on, I've got to be providing significant services. So we're then going to look at substantial income and see where that fits. Most of the time, substantial income is going to look like SGA, even though they're called different things. How about comparable work activity? What does somebody else in my community who has a sole proprietorship and is the only worker in the business doing? Am I keeping the books? Do I unload trucks when they come in with new supplies and new stock? We're going to look at what generally happens to somebody without a disability and compare the disabled person's activity to that and see if they're comparable. And if they are, you may be seen as doing SGA. And then the worth of the activity. The worth of, Social Security is all about charging you with the amount that you actually earn. And that gives the notion of subsidies entitled to when you have an employer that provides another deduction. We're going to look at the worth of your work activity. If I'm a plumber and I have a truck and pipes and tools and I drive out to Nikki's house to fix her pipes, what am I earning Yeah. Am I doing it all, or do I have someone coming with me who might be able to coach me a bit? Yeah. When I begin to forget things, I have somebody there who reminds me, do this first, Ray. Maybe the work I'm doing can be reduced a bit in value because there's somebody else helping me, whether they're paid or not. So that's what we're looking at. It's the same notion of subsidies, but different. If self-employment starts after months, this is much easier. Social Security applies the standard countable income test. So we have a judgment call here. And I had this judgment call to deal with about 6 months ago. I had a client who called and was interested in starting a business. They were in month 22 of their EPE. What is he going to do? I talked with this person and told him what tests would apply if he opened that business that month, or if he dragged things out a bit and got his license to do the business, got whatever permits he needed. Could you start this business in month 25 and simply deal with the standard countable income test? He decided eventually to wait 2 months, which I thought was a pretty good idea. That pre-24 months standard brings a lot of vagueness to the discussion, and I'd rather look at countable income. All right, Social Security will subtract work incentives from NESI. Now, remember, we talked about how we get to NESI. You have gross intake from your business. You arrive at NESI by subtracting business expenses. Now we've got a figure, and we can now apply work incentives to that figure to make that NESI figure countable income for Title II people. And Deborah's going to tell you about some wonderful deductions and how even the smallest thing might be worth a lot of money. Here again, if countable income is more than SGA, the person is working at the SGA level. Benefits will either be turned off if you're in your EPE, or if you're outside of that first 36 months, you will get a termination notice. Work incentives are very, very important to reduce countable income for people who start self-employment after 24 months. Clearly, we want these work incentives built up to the highest peak we can before we start chipping away at it. So these work incentives are going to be critically important for somebody who is self-employed. And Deborah, I think this is where I pass it off to you.
Absolutely, Ray. And I'm going to clarify one point for folks where there's confusion, and that is going back to the trial work period issue. And if you work 80 hours, even if you earn no money during this period, it's still going to count as a trial work period month. So I just wanted to be very clear about that with folks, that it's either you work 80 hours in your business or your net earnings from self-employment are more than the trial work period level. All right, let's talk about these great SGA tools. I'm so excited to share these with you. We're going to talk about how we can reduce that countable income for people who are working. So let's take a look. So the first work incentive we're going to talk about, the first SGA tool, is impairment related work expenses, or IRWEs. And these are really Social Security's way of recognizing that if you're a person with a disability, it might cost you more to work than it would cost somebody without your disability. So an impairment-related work expense, or IRWE, is the cost that you're going to pay out of pocket in order to be able to work. So there are three things that are required for something to be an IRWE. First, it has to be necessary for the person to be able to work. Second, it has to be necessary because of their medical condition, their physical or mental impairment. And third, it has to be paid for by the worker out of their own pocket. Cannot be reimbursed from any source. So, for example, if I get a prescription medication and it costs $500, but I only pay $25 for my copayment, my IRWI would be the part that I paid for, that $25. I couldn't count the $475 that my insurance company covered. So, in order for an IRWI to count, you have to pay for this good or service either in a month that you're working or in anticipation of starting work, and it has to be a reasonable cost. So maybe I haven't started working yet, but before I can start working, I need to have my door widened on my house and have a ramp installed, or maybe have handrails installed so that I can get in and out of my house independently in order to go to work. That could be an impairment-related work expense. Now, it says on this slide that Social Security will approve an IRWI, and that's true, but it's not like you're going to get a notice from Social Security saying, "Congratulations, Ray, we've approved your IRWIs in the amount of $422." They're not going to send a notice like that. The way you know that they've approved it is even though that net earnings from self-employment is more than the SGA level, you continue to get your benefits payments because the IRWIs have reduced your countable income to below that SGA level. Now, we've given you a site here to the Program Operation Manual System, or POMS. This is the Social Security Rulebook, and you can find more information about IRWIs in POMS GN 10520.030. So that's where you can find those rules. Now, let's talk about some policy to practice tips. There may be items or services that you need to go to work, and they could be approved as IRWIs, even though you also need them for non-work activities. So, for example, if you take a prescription medication and you have to take it every day as prescribed for it to work correctly, maybe you're taking it on days that you don't work. But that's okay. It can still be an IRWI. If you need that medical treatment to work, it's okay that you use it even on the days when you don't actually work. Now, one thing to note is that the impairment has to be an impairment of record with Social Security. So if you have a new condition that you're getting treatment for and you want to use those costs that you're paying as IRWIs, then you're going to have to provide Social Security with evidence about those new impairments. And you can simply take the discharge paperwork from the doctor, from the hospital, or the urgent care and provide that information to Social Security and say, "Hey, and look, I have a new diagnosis. They're prescribing a new treatment plan for me for another condition. I need to treat the condition to be able to work. This should be an IRWI." Now, you can find the POMs related to this at DI 10520.020. So these IRWIs actually get deducted from your net earnings from self-employment and can help reduce that countable income to below the SGA level. So maybe my net earnings from self-employment for this month are, $1,800. And I'm not blind, so they would say, well, that's more than SGA. But if I got $200 in impairment-related work expenses, that's going to reduce my countable income to only $1,600. And this year, that would make me eligible for my Title II payment. So let's look at some examples of some common impairment-related work expenses. And in the POMs, you'll find a list of things like this that can qualify as an IRWI. I want you to know that that list is not all-inclusive. You can think very broadly and creatively about IRWIs. So I'm going to go through the things listed on this slide, and then I'll give you some other examples. So the first one here is supported employment services. So maybe my state VR agency is going to pay for me to have a job coach when I start my new job, but after 90 days of successful employment, they're going to close my case and they're going to stop paying for my job coach. If I still need that job coach to help me and I decide to pay for that out of my own pocket, that could be an impairment-related work expense. If I need attendant care services while I'm working, or in order to get ready for work, or to help me after I get home at the end of the work day, those attendant care services, if I'm paying for them, could be an IRWI. Now, if Medicaid is covering those attendant care services, I can't use that as an impairment-related work expense. But if I'm paying for it out of my own pocket, I can absolutely deduct the value of those attendant care services. Transportation that is related to my disability can be an impairment-related work expense. So if I have to use paratransit, which provides door-to-door service, if I have to use Uber or Lyft because I can't drive because of my impairment, if I drive myself to and from work in my modified vehicle, those are all examples of transportation expenses that could be IRWIs. Now, if you're driving yourself in your own vehicle, the value of that IRWI is the number of miles that you drive to and from work, or maybe if you're self-employed, to and from sites, that plumber example that Ray gave you, to and from those sites, and they can take the mileage rate from the IRS and multiply that times the number of miles. So this one would be common for somebody who has a job where they're going to have to do a lot of driving. Medical equipment and devices can be deducted. So if you need any kind of durable medical equipment, if you need any type of medical device, and you're paying for it out of your own pocket, the part that's not being covered by your insurance could be an impairment-related work expense. Also, work-related equipment and assistance could be deducted as an impairment-related work expense. So if I had somebody who was a reader who helped me to read mail because of my disability and I were paying them out of pocket for that, that could be an impairment-related work expense. Service animals, and this does include emotional support animals, can be an impairment-related work expense. And think not only of the cost of the animal itself, but the training. Think about the crate, food, veterinary care, routine medications and vaccinations, toys and treats, and all the costs associated with having a service animal. Now, residential modifications are normally only going to cover exterior modifications. But if you're running your business from your home and you need to do residential modifications to make your office space accessible, then those modifications could also be impairment-related work expenses. Routine medications and medical services, so things like my copayment to see the doctor, my prescription medications, even my over-the-counter medications. If the doctor says that I need to take allergy medication during this time of year, then that could be an impairment-related work expense. There may also be non-medical appliances or devices that you're using. I think of things like the tools that you can use to grab things off of high shelves, assistance that you may need to get dressed if you've got tools to help with that. Those types of devices could also be impairment-related work expenses. So these are some common examples of IRWIs. I will tell you about some that I've used that aren't on this list. One is smartphones. A lot of my clients with disabilities have used their smartphones in many ways to help them when working, and it's related to their disabilities. So if I'm setting reminders to take medication or to take a break from work to test my blood sugar or to take care of other medical needs that I have during the work day, then not only the cost of my smartphone, but also my monthly service plan could be an impairment-related work expense. So think very creatively about how you could use IRWIs. Now, one note is if you're self-employed, you don't get to double dip. You don't get to deduct it as both an IRWI and a business expense. So you need to think about which way you want to use the deduction. There are some of these things that could never be a business expense, and you'll take them as an IRWI. There are other things that might qualify for both. So if I have like work-related equipment that I get, maybe that could be a business expense. If I deduct it as a business expense in the calculation of my net earnings from self-employment, I can't deduct it again as an IRWI. So let me give you some more information about IRWIs, and then I'll pause to see if we have any questions before we take a look at a case study. So we can use IRWIs anytime somebody's net earnings from self-employment is above the SGA level. So we can do it at initial application, but we can also do it anytime after the trial work period. During the trial work period, we use NESE or the 80-hour rule. We don't use IRWIs or any of these other deductions. So this doesn't apply during the trial work period, but after the trial work period, absolutely. If you have a recurring expense, maybe monthly or non-monthly, you can deduct it entirely in the month the payment is made, or you can prorate it over several months. So for example, if I have a quarterly expense that qualifies as an IRWI, I can divide it out over 3 months, or I can divide it in the month, deduct it in the month I pay it. One-time expenses, big expenses, can be prorated over a 12-month period. So if I do have to pay to have a ramp installed outside my house, and I pay $6,000 to have that ramp installed, I could take $500 per month as the IRWI. So for some folks, they might want to think about whether renting goods or services that they need might be a better option to ensure a regularly recurring impairment-related work expense. And remember, IRWIs are always a cost to the individual. So if someone else is paying for the good or service, it is not an IRWI, but we'll talk in a few minutes about another work incentive that you might be able to use. So Ray, do we have any IRWI questions we need to talk about? You just muted
Well,
yourself.
I just did it backwards. Okay, let me take off my glasses to read one. Okay, I'm going to ask you one. It goes back to the 80 hours. How does Social Security know you have worked 80 hours? Is it just by a personal report?
So we're going back to that trial work period 80 work test, that 80-hour work test. And yes, you have to track the hours you spend working on your business and report those to Social Security.
Okay, Jared's asking a good question about IRWIs. If I have a $500 per month medication and my parents pay for it up front, but I reimburse them, will Social Security count that as an IRWI by looking at how much and when I paid them back, or divide it over a number of months?
All right. First thing, I would never have your parents pay for it and you reimburse them. It's a documentation nightmare. If that's the way you guys want to do it, I would encourage the parents to put that $500 into your ABLE account, and then you use your own money, the ABLE account funds, to make that purchase. And then whether you reimburse your parents or not is up to you. But trying to document it, they're going to want a receipt. And so when they look at the pharmacy receipt, that's not your name as the person paying for it, right? It's your parents' name. So I would really discourage having other people pay for the services and then trying to reimburse them and claim it as an IRWI. I would really recommend using an ABLE account in that situation.
Yeah, the other problem, well, never mind, this is the wrong place to talk about that. We have a couple of what I like to call puppy questions. Would a therapy animal or service animal cost of care count towards the IRWI?
Absolutely. All of the costs associated with that animal would be deductible. Absolutely.
And can an animal that is considered an emotional support animal but that does not go to work with you be used as an IRWI, along with any out-of-pocket costs?
Well, I've had Social Security try to tell me no on that, but what I did was I got a statement from my client's therapist that said that if she didn't come home at the end of her workday to that emotional support dog in this case, and have that dog to help her to relax and unwind, that she would have never been able to sleep that night, and then she would not be able to get up the next morning and be rested to go to work. So just in order to be able to work, she had to have that animal at home. And in that case, Social Security went ahead and approved that IRWI. So think about whether you can talk to a therapist or another medical provider to get the evidence that you need to support why they need that animal even if it does not go to work with them.
If someone reports a new impairment, does that new impairment need to meet the SSA Blue Book criteria in order to be added to their record? Good
Nope.
question.
Nope, doesn't have to meet those criteria. So I'll give you an example. I had a client who had a really severe respiratory condition, but then was later diagnosed with chronic kidney disease. I don't even know if it would have met the listing, but the treatment that she needed for the chronic kidney disease, the medication that she took, the doctor's visits for the kidney disease, those were all deductible, and we never even looked at whether or not it met the listing in the Blue Book.
Yeah, and I think that brings to mind some of the complaints that I've heard about Social Security when that happens. They're telling people, don't report it now, wait until you have a continuing disability review. Well, yeah, at a continuing disability review, that would extra impairment might help you maintain your benefits. But we're not looking at disability when we submit IRWIs. We're already disabled. We are looking at drawing in additional IRWIs to keep our income below the SGA standard.
Yep.
All right. I think I'm going to let you go, Deborah.
All right. Thank you so much, Ray. I'll take a break again after each of these work incentives so we can have this conversation. So now that we've cleared up what IRWIs are, let's look at an example. Let's actually look at a case study. So we've got Maya, and Maya gets childhood disability benefits. And Maya is an amazing jewelry artist. She sells her bracelets and rings on Etsy. Maya is low vision and she uses special eyeglasses and magnifying tools for everyday activities, including creating that jewelry. She also has a large monitor with her computer that she uses every day, including to manage her Etsy accounts, looking at those orders, fulfilling those orders. And Maya paid for all of these tools herself. Maya can use the cost of the eyeglasses, the magnifying tools, and the computer monitor as IRWIs. All of those qualify. However, if she used any of that as a business expense when calculating her net earnings from self-employment, like the computer monitor, she can't double dip and use it as an IRWI now. But if she didn't use any of those in her calculation of net earnings from self-employment, then she can take all three of those as deductions as IRWIs. So the value of those items would be deducted from her net earnings from self-employment and can be used then to reduce her countable income to below the SGA level. So we just wanted to give you some examples of how these work and real examples. So that's how IRWIs could work. Now, the next tool we're going to use, the next SGA tool is called unpaid help. And this is when someone who's self-employed is getting help from other people. So let's take a look at how unpaid help is defined. So unpaid help is the reasonable monetary value of any significant amount of unpaid help from a spouse, child, or others. And just like IRWIs, we can use that value, we can deduct it from net earnings from self-employment to help keep countable income below the SGA level. And you can find these rules in the POMs at DI 10510.012, Section B, subsection 1. So I want to give you some policy to practice tips for using unpaid help. If somebody is getting unpaid help, they need to give specific information to Social Security to establish that they use this work incentive. So they're going to need to provide the name of the person who's providing them unpaid help, their relationship to that individual, the type and amount of services provided, and an estimate of the reasonable value of the services provided. So, Ray, did you have something you wanted to add? You just muted yourself. Okay, I'll keep going then. So let me do the case study first for unpaid help because I think that it's kind of a unique concept and it may be new to you. I'll explain an example and then I'll see if there are any questions specifically about unpaid help before we move on. So in this case study, we have Dimitri. Dimitri gets SSDI and delivers meals on the Grubhub platform. Because he has challenges with spatial reasoning and navigation, his sister volunteers to ride with him 3 evenings each week so he can make his deliveries. Dimitri gives Social Security evidence, his sister's name, the fact that she's his sister, the number of hours each week that she helps him, the specific tasks that she helps with, that navigation piece, and an estimate of how much he would have to pay someone else to provide this service. The value of that unpaid help can then be deducted from his net earnings from self-employment and reduce his countable income, hopefully to below that SGA level, so that Dimitri could earn more than SGA in net earnings, but still get benefits because that countable income is below the SGA level. So Ray, you're currently muted. So if there are any questions about unpaid help, you'll need to unmute yourself and ask those questions.
All right, I think I'm unmuted now. Oh God.
Lots of questions about emotional support animals I'm seeing. Back to Irwies.
Yeah,
And
we're still back on
absolutely,
Irwies for a lot of
emotional support
these.
animals count, people. Just get evidence from a medical provider about why you need the emotional support animal and you're done. That takes care of a lot of the questions I'm seeing.
You see, I'm scrolling way ahead. Well, we're looking at Irwies, yeah, and that 80-hour rule. So I think you can move ahead.
Yeah, Irwies don't apply because we're in the trial work period. So we got a question. Why does the relationship of the person giving unpaid help matter? Because Social Security says in the rules that you have to provide that information. Don't really know why they're asking that. I think sometimes they might think, well, maybe it's somebody that's being, I don't know. I don't know why they ask, but they do ask. I think this person's onto it. Would unpaid help include a job coach from an agency funded by some organization? So yeah, that could be unpaid help. So if you have somebody assisting you and you're not paying them for the help that they're giving you, that could be unpaid help. Somebody's asking about, they say they work at a developmental service funded program, and some people who are artists there get support from staff. That could be unpaid help,
Mhm.
absolutely.
Yep.
Yep. And somebody's asking a question. So we're talking about self-employed people in this course. So they don't have an employer to provide subsidies, right? And they don't have special conditions as a work incentive. And so unpaid help is really a way to try to level that field and be like, maybe we would call this a subsidy if you were getting this kind of help paid for by your employer, right? But you don't have an employer, you're a self-employed person. So if somebody's offering you help and support, then that could be unpaid help that you could use as a deduction. So somebody says, I get a lot of people with unpaid help from friends or family members doing business bookkeeping for them. What is a fair way to let Social Security know about their help? Determine the value. So the way they could do that is they can provide the name of the person providing that help, their relationship to that person, and what the value would be. And they can look and see if I were having to pay somebody to be a bookkeeper, how much would I pay them per hour? How many hours are these people spending on these bookkeeping services? And they could calculate the value of the unpaid help using that formula.
Deborah, have you ever been in a situation where somebody has claimed more than one emotional support animal as an Irwin?
I've had people try, I've never been successful with that.
Yeah. Yeah, I'm thinking that it's pushing the envelope, but it's a great thought. I like the way you're thinking when you're pushing those boundaries. That's our job.
Yep. All right, so let's talk about the next SGA tool that self-employed people can use specifically. And this is called unincurred business expenses. And this is where someone else is paying for a business expense for the person. So any business expense paid by another person or agency, and some of you have been asking about agencies paying for some of these expenses. So we've got an agency paying for this expense, right? Can be deducted from the net earnings from self-employment and reduce countable income to below the SGA level. And the POMS for this is DI 10510.012, Section B, subsection 3. So an unincurred business expense, you're going to have to provide evidence to Social Security just like you would with unpaid help. You're going to give the name of the agency or the person who's paying for that expense, the reason the goods or services were provided or needed, the time period over which someone provided those goods or services, and the value of those goods or services. So again, we're going to look at an example together, and then I'll answer any questions that you might have about unincurred business expenses. So we've got Joe, and Joe is an amazing photographer, but they really struggle with managing the finances for their photography business. So Joe's parents pay a certified public accountant to help Joe keep track of business income and business expenses. And then that accountant also helps Joe file business taxes each year. Joe gives the evidence to Social Security, the name of their parents, why Joe needs help with those accounting services, the period of time that the accountant provides help, and the amount that Joe's parents actually pay for those accounting services. And then the value of that unincurred business expense can be deducted from net earnings from self-employment and reduce Joe's countable income to below the SGA level. So this is another great way. This is like your special conditions if somebody were an employee, right? Where they might be getting help from an agency. When you're starting a business, you might be getting help and supports, and you could use that cost as an unincurred business expense. So
Now,
somebody said, yeah, go ahead, Ray.
I've got a question that's come up a couple of times. If Medicaid, if VR is paying for the service, is it unpaid help to the business owner?
So if it's something the person's getting, maybe because of their disability, maybe it's a job coach, right? I would say that could be unpaid help. Absolutely. You're going to have to figure out the value of it. If they're paying for a service that a business would normally be paying for, like accounting services or developing a business plan somebody's asking about, yeah, I would say that's an unincurred business expense. If VR is paying for you to develop a business plan, or they're hired a consultant to help you with developing your business concept, those are businesses that expenses you would normally have to pay for out of your own pocket. And if somebody else is paying for those, like VR, then you could use that unincurred business expense to reduce countable income and hopefully keep that below SGA. Any other questions that we need to be talking about right now, Ray?
Yeah, many. Would my meeting with clients as an employment specialist be considered an unincurred business expense?
I think it would really depend on the services you're providing. If you're providing services that a self-employed person without a disability would be paying for in order to operate their business, then potentially it could be an unincurred business expense. If you're providing support specifically related to their disability, then maybe I would need more information about it. What exactly are the services that are being provided? All right.
All
Lots of
right.
repetition.
What about business loans?
Well, a loan is just that. It's a loan, and the person's
Yeah.
going to be expected to pay that back. So that's not really unpaid help or an unincurred business expense. That's something that many people who start their own business are going to have, right? They might have loans to help cover startup costs for their self-employment.
All right. Someone's confused. I wrote that a job coach would not be considered unpaid help, but Deborah said it could count. I said it wouldn't be unpaid help because the person's being paid. It could be an unincurred business expense. So I think the labels here are what we're looking at. That, and it's a great thought that Deborah brought up that if it's not one, look at the other and see if you can fit it into that. And confusing and self-employment, that's the name of the game here.
No, no. All right, Ray, are you good with the rest of these questions? And
Yep.
I'll move on to wage reporting because people have been asking this. How on earth do we report these net earnings from self-employment to Social Security? So I am going to cover these, how to do this now. I'm going to talk about initial reporting of self-employment and then the annual reporting process. So let's take a look at it. So when somebody first starts their self-employment journey, they're going to need to report to Social Security as soon as they start. And it says here start earning income, but I really think as soon as they start working, because remember with that trial work period, we could have that 80-hour rule before you're even making money, right? And you need to be a really good record keeper when you're self-employed. You're going to need to keep track of all of your income, all of your expenses, and the hours that you spend each month working in that business, right? Because we need the income and expense information to calculate that net earnings from self-employment. And we need those hours worked each month when we're looking at things like the trial work period. And for someone who's been on Title II benefits for less than 24 months, when we're looking at the value of the work activity, even if you're not making the money. So Social Security can use projected income expenses during the first year of self-employment. And this can be really hard for people when they first go in. I may not have a good feel when I'm first starting my business, how much money I'm going to make and what my expenses are. Hopefully, I've worked with some professionals to help me and I have a good business plan and I have estimates for those numbers. But sometimes it can be challenging to come up with those estimates. Please know that if things change with your business, you're making significantly more than you thought, or your expenses are more than you thought, or things like that, you can report it and payments might be adjusted for your benefits. And then there's also an annual reporting requirement for people who are self-employed, and we're going to take a look at that in a minute. And after you do this annual report of self-employment, they can start adjusting your benefits. So if you are self-employed, every year by April 15th, you have to submit your federal tax returns. Even if you got an extension for filing with the IRS, you still have to provide those federal tax returns to Social Security, including all schedules, and you have to get all of that to Social Security. You have to provide them with that federal tax return and all schedules. And the schedules really matter for self-employed people because the schedules are what going to have those business expenses. So you have to get all that information to Social Security by April 15th. And then Social Security uses that information to project net earnings from self-employment for the coming year. For SSI, Social Security is going to divide the annual projected net earnings from self-employment over 12 months and attribute an equal amount of self-employment income to each month. It does not matter if you even work in that month. They are going to divide it over 12 months. So maybe you're doing some sort of seasonal work and you only work for 5 months out of the year. If you're on SSI, which we'll talk more about in the next class, if you're on SSI, they're going to divide it out over 12 months. Doesn't matter how many months you actually work. Now, for people entitled to benefits like SSDI, Social Security is going to divide your annual projected net earnings from self-employment over the number of months in which you actually work. So again, if you have a seasonal job and you're entitled to benefits, they're going to divide your NESE over those 5 months that you worked, not over all 12 months like they would for SSI. So for people who are getting both SSI and a Title II benefit, it can be very complicated because their NESE amounts will be different for SSI and SSDI if they work less than the full 12 months in a calendar year. So part of your job as a work incentive planner is going to be to help them understand that and understand how that division is going to play out in the calculation of their net earnings from self-employment. Now, they're using this projected amount, but if you have changes during the year, you need to report any major changes to Social Security. So if you start new self-employment, if you stop self-employment, or you have a significant change in the amount of income or expenses from your self-employment, you should be reporting that to Social Security during the year so that they can make adjustments as necessary. So if I were self-employed and I run SI and they projected, I was going to have this income for the next 12 months, and now I've gotten sick again and I've been in the hospital and I can't work in self-employment, I can report that to them so that they can adjust my SSI payments, right? So annual reporting is absolutely required. And then major changes should be reported for folks. So if something significant changes, make sure that they're reporting that to Social Security. Remember, for people who are self-employed, there's a different work activity report form that they can use. It's Social Security Form SSA 820, and they can file that form to report their work activity. Now, somebody was saying that Social Security said they always had to use that form to report self-employment, and that's not necessarily true if the change isn't bringing their income above or below the SGA level. So if my net earnings from self-employment are consistently less than SGA and the change I'm reporting isn't going to change that, then I should only really have to do a work activity report if I'm needing to report things like impairment-related work expenses, unpaid help, unincurred business expenses, because it looks like my NESE is more than SGA until you take those deductions. So I hope that helps clarify that issue. Are there questions about the wage reporting that we need to be talking about, Ray? You're muted.
I'm glad because it was an SSI question. No.
We're going to talk about SSI on
Yeah, we're
Tuesday
not
of
talking
next
about
week.
SSI today.
So just wait, we'll get there, I promise.
Yeah, we don't have any questions to write. What if someone hasn't done reporting and they come to see you?
Well, I am going to tell them that they need to report immediately. If they've already filed business taxes and have that tax return and those schedules, we're going to get them Social Security now, sooner rather than later. But remember, if you failed to report self-employment or employment for that matter, you may end up with an overpayment of your benefits. So you want to report promptly to minimize any potential overpayment and to make sure that if benefits need to be adjusted, that they're adjusted promptly.
All right, we have a question that goes to the root of self-employment or work in general and a hobby. A recent more A recent income generating idea that is getting more common is Amazon's print on demand program. A person may make about $5 a book sold. Is that considered self-employment?
Well, I think in session one, right, you guys talked about hobby versus self-employment, right? So, I mean, I'll give you an example. I'm a poet. I write poetry all the time. Occasionally, something gets published in a journal but it's not something I'm doing with the intent of making a living. I'm not there, right? It's just a hobby, something I do in my spare time. So I think that they're going to do that analysis that we talked about in the first session about whether it's a hobby or whether it's actually self-employment. So am I doing that so that I can sell books to my friends or I want to give Ray and Aleda copies of my poems because I'm excited about writing them? Probably not a business, right? But if I'm doing it specifically because I want to make money, I'm going to support myself through my poetry. Now we're shifting into self-employment, right? We're transitioning from hobby to self-employment there. All right.
If you're self-employed, what's the best way to report? An appointment? By phone?
Oh, there's no good way to report,
There's no
right?
good. I agree.
You might want to go ahead and make an appointment with Social Security, especially if you have a My Social Security account. You can go online to ssa.gov and you can actually make an appointment through your My Social Security account. If you have access to a fax machine, I know who has a fax machine anymore. Social Security does. So you could be faxing them your tax returns and all those schedules every year and keep that fax confirmation page as proof that you submitted that information. If you're going to mail it to them, make sure you keep copies. I would send it registered mail and I would request a return receipt from Social Security so I have proof that they received it. Not something that you can do very easily by phoning them and giving them the information because they actually need to see the federal income tax return paperwork and all of those schedules. So a little bit more complicated when you're self-employed because you need to provide all of that information. But you could do it in person, you could do it by mail, you could do it by fax. Um, but just make sure that you're being a really good record keeper. You want copies of everything you submit to Social Security. You want proof of how you submitted it. So if you do it in an appointment in person, ask them for a receipt just that spells out that you provided copies of all of this. When I was reporting for my clients, I would usually take 2 copies of their federal tax returns and their schedules, and I would actually ask Social Security to time and date stamp my copy. So I had proof this is what they received and this is the date and time that they received it. So that you can provide all of that information to them and have proof of how you reported it to them.
All right. So let me go scroll down a little.
Yeah.
All right, we've got some very, very detailed out in the weeds questions.
Let's not go out in the weeds. Let's stick with the main points.
Yeah, well, we have a confused person, and that's okay. I thought you said report earnings monthly, but now you're saying report if major changes occur.
If you can report monthly, I would still report monthly if I were self-employed and I had money coming in, I would still report it every month. This is what Social Security requires. Social Security requires that you report when you start employment or stop employment. They require for self-employed people that you do the annual by April 15th reporting of your federal tax returns with all schedules. And they require that you report major changes during the year. If I had if I had income coming in regularly, I would be reporting it as it came in too, just to make sure that I was covering my bases. I would want Social Security to adjust things as quickly as possible because I don't want to have to deal with an overpayment. It's a pain. I'm trying to start my business. I don't want to have to be worried about an overpayment from Social Security.
I'm sensing from a lot of the questions that we have outstanding is that people, you know, are concerned about most certainly reporting. What we're trying to tell you is how this system should work. We can't do anything about what Social Security does to things once your client has given them information. So, this is what the rules say. This is what we need to go by when we're counseling. And then when Social Security gets it, we either nudge them gently or not so gently to get things done. I'm in full agreement with Deborah. If we come up with an annual projection, I'm still going to report every single month.
Yep. Because, again, especially when you're first starting a business, what you're projecting your income and expenses to be may not be realistic, right? What if I discover that my health is doing better than I thought and I'm working and earning more, or maybe I'm struggling and I'm not able to earn as much, right? I want to give them real information as soon as possible.
All right.
And somebody's saying that they suggest reporting quarterly. And for some people, like in some states, for example, and sometimes with the federal government, you're having to do quarterly tax payments anyway. So it's not a bad idea if you're already doing quarterly tax calculations that you could be reporting that to Social Security at the same time. That's a great idea.
Yeah, I think it's a good idea too. I'm with Deb. I assist my clients with wage reporting monthly and track that TWP and EPE. Absolutely. How would you recommend beneficiaries report monthly if they have the information available when SSA is directly telling them not to?
Well, the great
Ex-
news is if they have a My Social Security account, you can upload documents into your My Social Security account. You don't have to go into the office and have them say, "No, Ray, we don't want any more paper from you. Go away. Don't report." You just upload that into your My Social Security account. And then you've reported it,
Yep.
and Social Security has that information. Now, if I'm doing work incentive planning for somebody and they do that, and I think something needs to change. Like, I think Ray's finished his trial work period, and I think we need to be talking now about SGA, and I need them to look at unincurred business expenses or, maybe look at unpaid help or an IRWI. Then I might go ahead and also have him fill out the SSA Form 820. I can have them upload that into their My Social Security account, but I would also be calling them or emailing them and saying, "Hey, you really, really need to look at these documents. You need to be adjusting raise payments, right? You need to take a look at this and you need to calculate all of this."
All right, Deborah, I think I'm gonna ask you this for everybody to hear.
All right.
Home modifications. Can they be reported in a rental home or just the home that you own? And I also would like you to expound upon the notion of home renovations in general.
So again, with home modifications, they're really looking on what's necessary to be able to work. When we're talking about taking the value of that as an impairment related work expense, right? So if I'm an employee and I work outside of my home and I need to be able to get in and out of my home independently, then they're going to look at things like maybe widening the door to my house, installing a ramp or installing grab bars, railings to get in and out of my house, whatever I need to navigate in and out. If I work from home, so maybe I'm running my own business from my home, maybe I am a remote employee for somebody else, then we can start looking at modifications in my house that are necessary to work. So I am not going to get my HGTV dream kitchen installed, darn it. That would be nice, wouldn't it? I'm not going to get my luxury spa bathroom. But the things that I need to be able to work from home, I could look at doing some of those interior modifications. And if that's something that somebody's looking at doing, I recommend talking to Social Security about that and being very clear about which of those expenses are impairment-related work expenses. And if you look at the POMs on IRWIs, they've got some really good examples of what they would cover and what they wouldn't cover as being an IRWI in terms of home modifications. So they've got some pretty explicit rules for people who work outside the home and people who work inside the home.
Yeah.
So if I'm self-employed and I'm operating a business and it's not in my home, not going to be able to do much inside my house, right? I can get in and out of my house, but not in my house. But if maybe I run a bakery and I have a bakery that's, a few miles from my house, but I use my home office to do all of my invoicing and ordering and things like that, then some of my work is from my home. I could look at doing the modifications I need to be able to work from my home.
Does an EIN need to be added to the individual's profile on my SSA before reporting?
So they're not using the My Social Security account to report wages like somebody who's an employee would be doing. So no, they will not be doing that. They will not add your EIN for your self-employment to your My Social Security account. But you can upload. So for example, if you have an accountant and they're doing monthly statements for income and expenses for you, you could upload those through the My Social Security account as a way of doing monthly wage reporting online to Social Security. Any more questions you think we need to hit, Ray, before I wrap up with our summary?
Well, I could lecture on this one for an hour, but I'll give it to you. Self-employment seems to require an ongoing relationship with the beneficiaries. Most of the funders that we work with have limitations on the hours provided. How do people get reimbursed for this as an ongoing expense? Could the benefits advisement then become an IRWI?
Yeah, so if somebody is running a business and they originally got work incentive planning services through a funding stream that's time limited, and now they want to pay for ongoing work incentive planning services, an IRWI, I don't know that it's necessary. What do you think, Ray?
I think that's very creative. You know,
I would try. I would
yeah,
always try.
I was wanting to talk about the whole issue of ongoing services, which I think are sometimes critical in this situation more so than others. But if I needed benefits advisement, I think I would argue that that's no different than talking to my tax account. I need to manage my benefits as well. Let's say everything gets terminated on Title II. What's going to happen? Yes, your health care may be in place. That is going to either make me able to earn more money in self-employment if my business is successful, or am I going to tone things down a little? So I think when we're balancing those benefits with self-employment, and you need to speak with somebody about that, absolutely.
All
I
right.
cer it like run it up that fat flagpole.
The worst that happens is they say no, right?
Yeah, well, if they say no, that's an appealable issue.
Yep.
And
Yep.
let somebody else look at it. Some of this stuff, all of these things that we're looking at, Irwis, unincurred business expenses, unpaid help, are all amenable to the appeal process. And if they say no, or if they tell you the value of a bookkeeper is $10 an hour, when you're finding that it's really $17.50 an hour, you want to bring more evidence to the table. So you want to print out that Google search, anything that you have. If you have an IRWI and they say, well, that transportation IRWI you're claiming doesn't appear to be related to an impairment, maybe. I answered somebody's question. If my anxiety prevents me from using public transportation during rush hour, I need the Uber to get me to and from work. That might require a doctor's note.
Mhm.
Yeah, but we can certainly take these up the ladder. Yeah, and I can only tell you that long ago, before emotional support animals were in vogue, we had a case about a Vermont cat that went to federal court. Yeah, that's how much I believed the psychiatrist and this woman. Yeah, and in federal court, the judge clearly looked and said, "Why is this sitting in front of me?" And I said, "Ask him." Ask the Social Security attorney. I don't know. And we won that case, so never underestimate appeals. And if somebody says no, you ask for a written decision. And if they don't give it to you, file an appeal anyway, based on that oral determination.
Absolutely. All right, well, I'm going to do our summary for this session. So remember, for people on Title II benefits, and Ray explained that includes SSDI, childhood disability benefits, and disabled widows or widowers benefits. When they first start working, they get a trial work period. And in addition to looking at whether or not net earnings from self-employment are more than the trial work period level for that year, Social Security is going to also look at the number of hours that the person worked in their business activity. And if they worked 80 hours or more in their business activity, then it's going to be a trial work period month, regardless of how much they earned. Or if their net earnings from self-employment are more than the trial work period level, it's going to count as a trial work period month, regardless of how many hours they worked. So either one of those is enough to count as a trial work period month. Then, after the trial work period, when Social Security is using SGA to see whether or not someone will get a payment during the extended period of eligibility, self-employed workers can use impairment-related work expenses, which is familiar to many of you who do work incentive planning. You know those already. But they also can use the value of unpaid help. So, is somebody helping you with some function of your business in order for you to be able to operate it, and you're not paying them for that service? Can you use that as a deduction? Or do you have unincurred business expenses? Is an agency or another person paying for a good or service that you need in your self-employment activity? And you can use the value of that support you're getting from that other person or agency to reduce that countable income. So remember, we're using net earnings from self-employment when people are self-employed, and we can deduct the value of IRWs, unpaid help, and unincurred business expenses. All of those things can be deducted from the net earnings from self-employment. And that can help the person to keep those Title II benefits for as long as possible. Now, for people who are self-employed, Social Security has special income reporting rules. They're going to have to provide their federal income tax returns with all of the schedules to Social Security by April 15th of each year. When they first start self-employment, they have to report that to Social Security. They're going to estimate income and expenses. They're going to calculate net earnings from self-employment on that projected basis until you provide them with evidence of what actual income and expenses look like. So you can do that on that monthly basis. Somebody recommended quarterly if you're doing quarterly taxes. That would be another option. And then make sure you report any major change in self-employment to Social Security. So if you start new self-employment, if you stop your self-employment, or you have a significant change in your self-employment, you're going to have to report that to Social Security. And it's really important to report that information promptly to help minimize the risk of having an overpayment from Social Security. So I am going to stop sharing my screen at this point, and I'm going to give you a little preview. So next week, we are going to talk about the special rules for people who are self-employed and on SSI. We're also going to talk about what happens to health benefits for self-employed people. So we'll take a look at some Medicare and Medicaid rules, and we'll take a look at the Affordable Care Act marketplace and some of the plans that are available to self-employed people. Then we'll wrap it up by talking about resources that are available to people who are self-employed and disabled. So we'll give you lots of self-employment resources that you can use. And we'll do a few big case studies to put together all of the pieces that we've been talking about in this course. Ray, was there anything else you wanted to add?
Nope, I just wanted to say have a good time with Deborah and Aleda for the next 2 sessions, and I'll be back on the last one. I think a week, 2 weeks from now, I think.
Fantastic. So yeah, Aleda and I will see you all next week. If you guys have any questions, you can send them to us at whip-credential@cornell.edu. I want to thank NDI for hosting us. We really appreciate it. I want to thank all of you for your thoughtful questions, and a special thank you to our ASL interpreters. We appreciate you.
Thanks, Ray. Thanks, Deborah. And just a reminder that there are still a lot of unanswered questions, but we will be collecting those, sending them to our trainers, and getting those responses out to you as soon as we possibly can. But give us some time to do that. There are a lot of questions. All right. Thanks a lot.